How do you calculate alpha and beta for your portfolio? More importantly, what information does that actually give us about a trading strategy or the assets in our portfolio? Well, this video is split up into three parts. The first is a quick rundown on what alpha and beta actually are and what they tell us about our portfolio or trading strategy. The second is a practical application, that is, we're going to actually retrieve our portfolio returns historically, in this case using interactive brokers, and I have a script to automate this process for you. So if you're holding assets in an interactive brokers account, this is going to be completely automated. You're going to be able to fetch your portfolio returns. And then third, we're going to take those portfolio returns and run them through a cell in this Jupyter notebook. It will tell us our rolling beta and alpha exposure over time, and it will give us performance metrics relative to a benchmark. So even if you're not using interactive brokers, you can still get your portfolio returns and then feed them into this Jupyter notebook to run the analysis. Let's start with a quick rundown on what alpha and beta actually are with a simple animation. So what I'm going to show you here is effectively two portfolios or two trading strategies. On the left, you can see here we have a portfolio that is significantly outperforming the market. But if we run a regression, we can see that the returns are extremely positively correlated with the market returns. What that means is this strategy is just a levered form of market exposure. If the market enters a bear cycle, this strategy is going to tank alongside it unless there are other physically uncorrelated reasons for it to outperform. You can think of a hedge leg, you can think of a hedge sleeve, the list goes on. On the right here, we're actually taking a look at not exposure to the market, but some form of alpha. You can see if we take a look at this regression, the returns for our portfolio or strategy literally have nothing to do with the market returns. You can see that the path that we walk, this blue portfolio path, it doesn't track the market at all. And if you take a look at the scatter plot of returns and you run a regression, the slope of the line is roughly zero, if nothing else, negative. So this strategy does not care at all what the market does. This is the difference between alpha and beta. On the left here, you're seeing beta. There's no alpha here. We're simply just overexposed to the market. And on the right, you're taking a look at what alpha looks like. It has nothing to do with this undiversifiable risk factor. It doesn't matter if the market tanks. It doesn't matter if it goes up. There's literally no correlation. You can think of them perhaps as physically decorrelated with one another, but it depends entirely on what is generating this alpha. It's not guaranteed to persist into the future, just like how we don't know which direction the market winds are going to blow. There's no free lunch. There is no return without any risk. Now that we have a quick rundown on what alpha and beta actually are, we're going to head on over to Interactive Brokers, the trader workstation, and retrieve our positions for our portfolio. I'll leave a link in the description if you'd like to get started with Interactive Brokers. They're the only broker I use. I've been with them for over 10 years, if you can believe it, in a trading and investing capacity. They're the only broker I use, and we use them for every single quant build on this channel. So again, I'll leave a link in the description below if you'd like to get started with them. Once you boot up your trader workstation, you're going to be able to place trades. You can place trades on stocks, futures, bonds, any security that you can come up with and hold in your portfolio. If you're targeting a role as a trader, market maker, quant, or you're just looking to grow and protect your portfolio in all market climates by applying quantitative strategy, QuantGuild has two crazy free resources available to you. When you get started, you can pick your track. You can always change this later. If you're looking to break in, head on over to the Quant Roadmap. Every topic in the right order that you need to know for success in different roles. You can select them here. It will tell you the exact breadth and depth of knowledge you need in each for success in interviews and the career as a whole. And of course, if you're looking to grow and preserve your wealth, you're going to want to run your own personal hedge fund. This isn't a day trading strategy. It's structure institutions use every single day to cut their downside risk in half, improving their overall long-run return. I have a free quant research note available to you on this page for exactly what is going on. Link in the description below to QuantGuild if you're interested in these free resources.